Hello, thank you very much for joining us. It's Your Business Nigeria. Here are the highlights for today. Nigeria emerges top 5 World Bank debtors list as NCC raises red flag on new malware, hidden odds, which has infiltrated our Google Play Store. Banks of England set to sell gilts, even if it quotes rates in future. Well, on our interview segment today, we'll start with Nigeria's debt service expected to hit 10.43 trillion naira by the year 2025, as captured in the 2023-2035 medium-term expenditure framework and fiscal strategy paper. For the second part of the interview segment, we'll take a look at the lingering global food crisis and efforts on the continent, Africa, and here at home to mitigate the intensity of current food insecurity. Welcome to the show. Let's start with some news making headlines across the world of business. Rising debt has pushed Nigeria up the World Bank's top 10 International Development Association borrowers list. The World Bank Fiscal Year 2021 audited financial statements, known as the IDA financial statement, showed that Nigeria was rated 5th on the list with $11.7 billion IDA debt stock as of June 30, 2021. However, the newly released World Bank Fiscal Year 2022 audited financial statements for IDA shows that Nigeria has moved to the 4th position on the list with $13 billion IDA debt stock as of June 30, 2022. The Nigerian Communications Commission's Computer Security Incident Response Team has flagged the new malware, hidden odds which has infiltrated Google Play Store that can impact device performance and jeopardize users' privacy. In its August 8th advisory, NCCC CERT certificate, the virus classifies, the virus first identified by the MCAFR mobile research team as high in probability and damage potential. The malware infiltrated the Google Play Store in the form of several device cleaners or optimization apps. Anyone that installs the compromised app will experience their device performance suffering significantly. Clicking on the ads may result in stealth downloads, installation of other malware users, and users are inadvertently subscribed to service and be billed on a monthly basis, and the privacy of users will be jeopardized. Let's now have our first conversation for the day as we stay on Nigeria's rising debt profile. The federal government has projected that the debt servicing will cost Nigeria 10.43 trillion naira by 2025. Well, this was captured in the 2023 to 2025 medium-term expenditure framework and fiscal strategy paper. Well, this is a whopping 182.6% increase from the 3.69 trillion naira budgeted for debt service for this year. Multilateral agencies and economists have constantly warned the federal government about the rising cost of debt service and fuel subsidy payments, which can trigger a crisis for the country. However, the Minister of Finance, Budget and National Planning, Zainab Ahmed, and the Director General of the Debt Management Office insists that Nigeria does not have a debt problem, rather a revenue generation challenge. So far, there has been several slums from players in the business community in Nigeria over the federal government's debt proclivity, stressing how this further exposes the already fragile economy to the diverse economic vulnerabilities. Well, let's talk about this in our first segment of the show, and joining me to understand all the elements fueling this development, I'm being joined by Mr. Tajuddin Ibrahim. He is the Director, Research and Strategy at Chapel Hill, Denham. It's good to see you. Thank you for joining us on the show today.
Same here. Thank you very much for having me on the show.
Yes, in my introduction, reading out the figures, it was getting kind of scary. But first, I would like to ask you, what is your understanding of the current state of Nigeria's debt, where everyone continues to maintain different positions? We don't have a debt crisis, we have a revenue crisis. Which is which?
I think we actually have, both in terms of, crisis. So we have a situation where our revenue is not, up to expectation in terms of the budget. So our revenue is significantly running behind, in a budget. That is a negative, thing when you look at it from, a funding, standpoint. The second thing is we also have, a debt crisis, because if you look at our debt level and, importantly, the debt service, they are rising at a faster pace, compared to, what we are seeing in terms of revenue. And so it really calls for a concern. And, one does not need, to say much in this case. What we need is just to address, the challenge, whatever those challenges are, and ensure that we are back on track in terms of the ability of the country, the governments to generate revenue, and also slow down on the rate of increase of debt.
Let's kick it off from this where you just stopped. If we are still hovering around the IMF and World Bank's benchmark, do we really have to worry about a debt crisis? Because, there's always that argument that we are yet to get to that threshold.
So we should worry, right? Because, if you are talking about, benchmarks, those benchmarks, largely speaking, are referring to our debt to GDP ratio. And, I think a lot of people, not necessarily economists, these days now realize that you don't pay your debt, using the GDP. So what really matters in this case is the ability of the country to service its debt. And let's take a look at, a few figures on the table. The first is around our, revenue generation. So the revenue based on the 2023 to 2025, sort of MTEF, we have it that revenue is forecast to grow by 7%. At the same time, we have debt service to grow at an annual rate of 41%. So when your revenue is growing at a much slower pace of 7% per annum over the next 3 years, and you have your debt service growing at a much faster pace of 41% per annum, it means that there will be a point in the next 1 or 2 years, that you will be in trouble if you don't address, that mismatch. Let us take a look at another, ratio in this case, which is debt service to revenue ratio. As at the first 4 months of this year, Nigeria reported a debt service to revenue ratio of 118, percent, which means that we utilized all our revenue in the first 4 months of 2022 to pay debt. And it was not even enough to pay all our debt. We have to probably borrow from another source to pay another, sort of debt, if you understand what I mean. But how about next year? The picture is looking like that number will moderate from 118% in 2022 to 101% in 2023, which means by next year we will still be paying, we'll still be spending 100% of our revenue on debt servicing, which is not a good thing, and which is really calling for concern. 2024 seems to be like the year that we will have the number being 74%. That is not even the best, but it is likely going to be better, and it reflects the absence of subsidy. By 2024, there are plans that there will be zero subsidy on PMS, and that is when we are looking to have debt service to revenue ratio at 74%. So it is a major concern this year and also next year, because we still have some element of petroleum subsidy in the budget.
But at the first, we talked about revenue, staying with revenue generation issues. I am worried, and I don't know if you are, that governments, state governments now at the moment, why are they not taking concrete steps, both state and federal, to, increase internally generated revenue at this very critical time? What other revenue options do we have?
Well, I think, the other revenue options, that exist are very limited. And this is where, state government, I've always said it on, shows where I appear that, state governments need to do more in terms of, generating, revenue, particularly internally generated revenues. But there will be challenge. There will be challenges for them to generate such revenues, because you will be asking questions like, have they invested in infrastructure that will make businesses to open up for growth, that will drive the growth of businesses and encourage them to pay taxes, which was going to be a major element in terms of internally generated revenues. So most states in Nigeria have not really made such investment in infrastructure to help businesses grow and be paying taxes. They also have not been able to attract foreign investment that could come into the country and help the development of states, and build some infrastructure that can support businesses, generally speaking. If we have all those in place, then we'll be talking about higher IGR for them. And that is one area that I believe the government should be looking at. We may not have it as we speak, but how about we plan for the future, for the next 3 to 5 years? Can we build the infrastructure that will enable businesses to grow? Can we put in place policies that will attract foreign investment? Can we be accommodating to businesses, new businesses, small, medium enterprises to grow in the country, and we monitor them in terms of tax payments, for instance? And we have that plan over a 5-year period. If we can do it, then all the states will have the results to show after like a 5 to 7-year period. It requires planning, in my opinion.
Now, from all economic indications, let's assume that we continue to borrow at this pace. We'll continue to bring in funds, to support the economy, try to grow the economy, try to fight recession and all of that. And of course, on the other hand, the central bank continues to defend the naira with limited effects. What scenario, what effect would that have on an economy that prepares for an election in the next few months?
Okay, so if we do not change our ways and we continue this way, feeling like we are good and we can, run through, the current challenges, I think it will not last beyond 2 years before Nigeria would have, like a debt crisis. We have heard about, countries that have, defaulted on their, sovereign debts. So it is much likely that Nigeria will also, be in a similar position, or will be very close, to that kind of, levels. But the question is, do we want to get to that level before we address problems? I think no, we shouldn't, and that is why I am thinking the government should do something instead of, watch, things get worse over the next 2 to 3 years. Otherwise, we will join some countries with history of default on the sovereign debts.
Let's talk a little bit on tax, which is something that analysts would say is also a way or somewhere that we're yet to totally harness the potentials in that space. Finance Act was out for government to be able to raise more money one way or the other. But would you say that Nigerians are appropriately, or when I say adequately taxed, and those that are not taxed, do you think bringing them to the net would help also get more funds? Because the FRS keeps coming up with figures, and many say they are doing better than expected. But can we do more without overtaxing those that are paying at the moment?
Of course, we really can do more in terms of our, tax, revenue, that the government, generate. We are a large economy. We are an economy of well over 200 million people. So, which means we have, the people that, can do work that, will be taxable, make profits that are taxable. And I think, the government should look in the direction of the informal, sector in this regard. And my sense is also that the informal sector is more compelling in terms of, tax income potential for the government compared to the formal sector. Because when you are in the formal sector, you have to report your figures, you report your numbers, you have to provide your tax identification numbers, and all those will be used to track you and then ensure that you pay taxes. What about the informal sector? Who is tracking them? Who knows the revenue that they generate? Who knows what their taxable profits are? Who knows what and when they remit their taxes? So all these are areas that I believe that we should have the government focus on. If it is too late, for the current administration to achieve, success on that front, my sense is that the incoming administration should focus more on ensuring that the non-oil tax, and also non-oil, revenue generation capability of the government improves substantially, and this can be achieved if we have the informal sector, more people in that space in the tax net. By then, we'll be talking about significantly positive changes in our tax income in the country, in my view.
If we are unable to service our debt and projections for the budget are not being met, of course, 100%, we can't meet that 100%, but will not be met to a substantial level, what impact do you also think this would have now on the implementation of the budget itself, if we cannot meet up with assumptions and all of the demands that are expected?
Okay, so let's look at it from this standpoint. Number one, revenue is growing at a much slower rate.
Yes.
And I just said earlier that debt service to revenue, for next year, for example, is 101%, which means we are going to spend the entire revenue generated next year in servicing debt. When we do that, how do we fund the non-leg recurrent expenditure of the budget? There will be a problem in that regard. The second element, and probably more important element, is how do we fund the capital expenditure leg of the budget? So which means the capital expenditure leg of the budget is going to suffer because the government will pay more attention to non-debt recurrent expenditure after debt servicing. So this is where we need to do something in terms of how the debt stock is rising. And we also need, of course, to do something more importantly around how we grow our revenue. It is clear that oil revenue is the major source of problem for this country. 3 factors have been identified. Number 1, theft. Number 2, attacks. Number 3, subsidy. The government should just put all efforts together and address these 3 key challenges for us to have higher revenue that will cover our debt service and ensure that we are able to take care of the non-debt recurrent expenditure leg, and importantly, invest on the capital expenditure leg on infrastructure that can develop us as a country. Not just ensure that we grow, but we grow sustainably over the medium to long term. You do that, you achieve that only when you invest in infrastructure.
Finally, oil, like you said, we focus so much on proceeds from crude And you identify the challenges that we face in that space that government is still yet to tackle head on. But let's stay with the non-oil space now. Are we also doing enough to improve our non-oil exports? That's also somewhere I think that the Central Bank, Nigerian Export Promotion Council, and all of the agencies surrounding, I think they should do more for us to be able to, get some effects from that end and boost revenue.
So this will take us back to infrastructure. Okay, we are in a country where we have huge population, and our power generation, for instance, is extremely below, the requirements, and also distribution and transmission. All these sort of segments of power in the country are below in terms of what we should be utilizing as a country. So how do we as a country grow in terms of small and medium businesses? That is where we should be looking at if we are considering non-oil revenue. So because these businesses are going to grow if you have the right infrastructure. So if we do not have those infrastructure in place, like us having the best power in terms of generation, transmission, and also distribution. And secondly, we have good road network, and we have security. Importantly, there is no way that we can make any progress on the non-oil leg in terms of revenue generation. And it is important to bear in mind that what really matters in the international market is what you bring in terms of finished products. That is when you are adding value. So we export agric products. Are they processed? No. What we export, largely speaking, are not processed. So you will not really generate much in terms of revenue. But when we have a situation where we have cocoa grown in this country, and the cocoa where we export beverages, we export chocolate and so on, and some other finished products, then you will be earning more value for the products that you are exporting outside of the country, and that will boost your non-oil export income. So those are the directions I believe we should be looking at. Many companies have left this country because the cost of operation is way too high. It is high because of the lack of the required infrastructure, in my view.
Brilliant conversation there. I must thank you, Mr. Tajuddin Ibrahim. He is the Director, Research and Strategy, Chapel Hill, Denham. Do enjoy the rest of your day. We appreciate your time. Well, from dead issues, let's move to another very important and, of course, worrisome development. We'll be doing an analysis of lingering global food insecurity. What is happening across board? Well, joining me live in the studio after this is African Farmer Mortgagee, is the CEO of Farm Credit to the NG, is live in the studio. We will now delve straight into the second segment, looking at the global food market and intensity of the food insecurity, especially on developing economies. Record high food prices have triggered a global crisis that will drive millions more into extreme poverty, magnifying hunger and malnutrition while threatening to erase hard-won gains in development. The war in Ukraine, supply chain disruptions, and the continued economic fallout of the COVID-19 pandemic are reversing years of development gains and pushing food prices to all-time highs. As at last month, the agricultural index was pegged at 19% higher compared to January 2022. Maize and wheat prices are 16% and 22% higher going by today's figures. Part of efforts to address food crisis on the continent, the president of the African Development Bank, Dr. Akinwumi Adesina, says the bank is set to deliver climate-adapted, certified wheat and other staple crop feeds to about 20 million farmers. For Nigeria, the composite food index rose to 20.6% in June this year. The ripple impact is that more and more Nigerians will continue to spend about 60% and above of their income on food. Well, joining me to discuss more on the latest developments on the global food base, supply chain disruptions affecting local production, as well as some outputs of the bulk strategies to support food production despite overall insecurity in Nigeria. I have Africa Farmer Mortgagee in the studio. Thank you so much for your time. It's good to have you around.
Thank you for having me again.
Yes. Truth be told, it's a time that we all need to be worried. Just like we're worried about the debt issue, we should be worried about food. I don't think food is more scary than the debt angle of it. But let's do an overview first, because you're in the system, and I always like us to have a background to what we want to talk about. After COVID, moving on, we thought all was well. Well, slightly COVID is still hitting in some areas, in some countries. We still have lockdowns, we have restrictions. All of this is affecting movement of food produce and all of that, particularly grains, wheat, and all of that. What's happening? Tell us your experience.
Well, it's predicted, especially during COVID, that food prices, food prices will go high. However, it's also predicted that if we don't take action, if we're not proactive, we will be where we are today. And unfortunately, the Russia-Ukraine challenges, came on board. And I recall I was here end of February and sometime in March, talking about that, the fact that this is not going to be a usual war. It's going to be a food war. I did say it here on your breakfast program. And now it has evolved to being a food war because people were not aware of what had happened in November, October 2021. So bottom line is that countries like Egypt took proactive actions, over-imported from India, so they have huge stock. While we were just observing as an international...
We're taking our time.
Yeah, we were thinking it's an international issue. So why we are here is because we've not been proactive. And I don't blame government for it also. I blame more private sector because private sector have the funds also. They could have also, brought in experts to say, where is this going? To take advantage of that. So just imagine if one of the billionaires in Nigeria has brought in excess wheat and coal, now they will be smiling more to the bank. So it's not only government, it's both government and private sector that has not been proactive.
Talking about how inflation bites hard. Now, let's be very practical here. Bread, the bread you buy maybe for 100 naira before, now you buy at 200 naira. And it's not even as, when you look at the loaves, it's not what it used to be.
Yeah.
So that is one. Also, other food products, when you want to buy pepper, tomatoes, and all of that, you must agree with me that the monies you drop at home or that you give at home for food must have increased one way or the other. The purchasing power doesn't match up with that. Insecurity is something that many of our farmers have identified, that they cannot go to their farms. Yeah. One way or the other, they cannot harvest even when they're supposed to go to the farm. What's the true picture of this?
Well, it's more, we're feeling more impact of farmers not being able to go to their farms in various sectors or regions of the country more than others. Now, so northeast, northwest, a bit of north central, but southwest is not really affected like the northern part of the country. But southwest also is not proactive. So now we have people being challenged, people who are not really challenged, who have not taken advantage. But bottom line is that in some areas we can say farmers cannot go to the farm. In the southwest and some north central, they can go to the farm. But productivity is a challenge. See, I have said this because I've been around many of the government intervention and even developmental, foreign donors. All those programs I've said is meant to keep the farmers poor. And why do I say this? They still give, and I've said it many times, they give the farmers the seed that have low yield. They give them same fertilizer, give them same input, and want them to work miracles out of it. Meanwhile, in the same country, we have seeds that would give double the output. So it's the same labor, it's the same land preparation, same everything. So if you have a seed that will give you 5 to 6 tons, and you provide the farmers with government intervention that will give them 2 tons, 2.5 tons, of what use is that incentive? So if we have been proactive in embracing best practices and supporting the farmers with good input, productivity now, even though the farmer land size has reduced, we will still be able to get something out. And also, Nigerians, we are trapped in our pasts. We just talk about past. In the country currently, there are agric inputs that is currently in the country that can help the farmers at least double their productivity, double their yields. But, everybody's talking about the old, nobody's focusing about the new. And one more thing, we focus on the infrastructure that we don't have. We forget the underutilized or abandoned infrastructure, begging for people to just wake up. If we leverage the abandoned infrastructure, we will feed ourselves. I think right now we should, step it down from talking about what we don't have and we cannot get because we don't have the money, and focus on what we have, the dams. The roads are bad, yes, but the roads are motorable. And the truth also is the roads are better now than before. That's the truth. I'm not a politician, but the roads are better now than before across the country.
I saw the Minister of Works and Housing talking about that, not limited to just one state. It's all
across the country.
Yes, I think I've been monitoring.
It's not a popular conversation,
yeah, of course,
but we will say it. We are in the field.
Yes, true.
The roads are better. Great. So it's better, so we should stop the narrative around roads. And we use the better roads. How are we moving the foods? We need more logistics now, not the roads. It's old syllabus talking about bad roads. It can be improved, but there are better roads.
Let's move on now to support. We've been getting a lot of support. And when things like this happen, it's always a norm. Monies come from everywhere. The FDB is in, IFAD is in, the government is in, and everybody comes in with support. And we keep hearing millions of dollars and all of that coming in. I also know that the central bank has also invested in, farmers to, double of the acres of what they used to do with regards to also wheat, to bridge the same gap. Is it not too late?
One, it is late and it is wrong. The first, I used to grow wheat in Jigawa. A lot of these things they bamboozle us on. Do we have a comparative advantage in growing wheat? The answer is no. We have a comparative advantage in growing cassava, in growing yams, in growing corn. Wheat does not affect everybody. Bread is luxury. That's the truth. Bread is luxury. Yam is not luxury. Tomato is not luxury. We need corn. If CBN focuses, or AFDB, focuses heavily on corn, the cereals that the children eat, the livestock, all those prices will come down. There will be high protein intake. What I'm saying is that the international politics around food security is huge. There's a lot of politics around food. And why do we have developmental agencies fund projects that you don't have comparative advantage on? And let me share an example. I won't just mention names. So we have institutes in the country that are about 20, 30 years old that are working on like corn and some other grains. They will tell you they are working on the nutrition, not the yield. So you still have the same yield that we've had in 20 years, but they say they want it to be more nutritious. But until it is profitable for the farmer cannot scale it, which is politics. So we will hear the billions of dollars coming in, but they track it down to wrong things. They will fund you. I've been involved in all this. There's nothing, they will give you 1 million euros. They will tell you 250,000 euros should be for travel. Another 150,000 euros for consultancy. The money to spend on the project is very small. That is the truth about all this big funding we hear. It is not genuine. And when you hear about CBN funding also, monitoring and evaluation kills all CBN interventions. You hear about the big output. They say, yield has increased, but the food in the market has increased, 100%, 50%. So we need to stop deceiving ourselves and, open new conversations around How are they doing it in India that they are getting results in Malaysia and it's not rocket science? Monitoring and evaluation and bringing new innovations. The innovation is in the country. It's just that, do you have the right people there? Do we have the right people in the ministries of agriculture who are heading agriculture, water resources, Ministry for Youth and Development? Do we have the right people there with the right experience? Not a PhD holder, with all due respect to PhD holders. We need practical people. Enough of this consultant. I'm checking around the politicians because politics influences agriculture. And I'm not seeing the right conversations. I'm seeing consultants speak through them. But the consultants write documents. How many, the big consulting companies, how many of them have written consulting feasibilities that has worked? They all fail because there's a factor, ground, the local technology. President Obasanjo calls it local intelligence. That is missing from those things that 3 years down the line, it crashes. So we need players in those ministries for us to be food secure. If not, huge challenge coming.
You talked about seed, and I know that one way or the other I've come across this genetically modified seeds and all of that, that I think could tell us more about that. And is that the way to go?
So you see, the GMO conversation, a lot of ignorance is out there about GMOs.
Of course.
Now, many people don't know that a majority of their ketchup, a majority of their cereals is produced from genetically modified crops. Especially the middle upper class that seem to want, they are crazy for foreign foods. Almost everything, there are brands of oils that they take is all GMOs. Now, I'm neither for GMO nor against GMO. I stand in the middle. If we can't feed ourselves and it is GMOs that we need to first stay alive to now say if one food is good or the other. But GMOs have evolved over 20, 30 years. And we don't have any crop in its natural state. And that is truth. A majority, cocoa, cola, name it. So we need to balance it. We need our reserves, our food reserves that are empty. We need them filled. If it is and what's the benefit of the GMOs? One, it is immune to climate change. So pest invasion, weed invasion, it secures that the farmer makes profit and food is available. Right now, the prices is going higher. If we have that now, I'm sure everybody will say government is doing fine. However, if there's a mutation, if something happens along the line, we don't have the research institutes adequately equipped to be able to track what happened. So I am saying that for the GMOs, we can have a few big companies invest in it, produce in it, store it. Government will compensate you if we don't consume it. But peradventure, what we've observed in Europe is happening now, where the heat wave, the dams in Netherlands dried up and coal. If we have it in Nigeria, we won't be talking about GMO or no GMO. Put the food on the table. However, for me in Nigeria, because of that infrastructure that we don't have, we need to pay attention to still use the conventional, the hybrids. I am more for the hybrids. We need to advance to GMOs. We've not gotten there, but if we have to use it, we have to use it. GMO is not as bad as it used to be. It's been worked on and it's food. And I've eaten it, but many of us are regularly, the rice we eat generally is GMO.
Let's wrap up on this note. I was reading through and I saw that budget from 2016 to 2021 is about 874.83 billion naira. Meanwhile, imports of agricultural products into the country within the same period is 7.81 trillion naira. Where do we stand in all of this? It shows that we still keep importing.
Yes, we're still importing, but the good thing, actually, my favorite quote, out of every adversity comes a greater or equal opportunity, provided we can find it. Adversity brings in opportunities. Because dollar is going higher, cost of living is going higher, it will automatically force us to produce locally. We will cut our rice intake. We will cut all the bread that we consume because we are enriching other countries, and we will have to produce locally. We will eat local tomatoes. So we should not look totally to the negative. The positive is we will create more jobs now because we don't have a choice. It's unfortunate that because we don't have a choice, that's why we have to do it. Meaning, when everything goes back early, we switch again. But right now, we have the opportunity to create the jobs. We have the opportunity to feed ourselves. We have the opportunity to depend less on imports. And guess what? We can grow our GDP better. If we have the right people, if we embrace our dams, and if we get the Ministry for Foreign Affairs, Ministry for Water Resources, Ministry for Finance, Ministry for Agriculture, Ministry for Youth and Development on the same table with a common goal. I believe one of the next people coming in should be able to focus on that, and we'll get results.
So as it is, what do you think about food inflation moving on in the year? Are we still going to stay high? Because it's looking like we're going to stay on that.
It's still going to go high, but the good thing also is that it's a producer's market now. Before, it was a buyer's market. But right now, it's the producer because demand is more than supply. So we need to talk to the private sector, woo them, show them the numbers, and let's produce, make money, and start our processing. But it's not going to go lower, it's going to go higher. It's the people who have funds now, this is the time for them to make money.
I must thank you so much for your time, Africa Forum Mogadi. Thank you so much for joining us on the show. It's always a pleasure having you break down issues surrounding the agricultural space and making real sense of them. Do enjoy the rest of your day, and we hope that things get better than expected.
It will. It will. Thank you for having me.
Well, thank you for staying tuned. Mr. ROTIMI FAKAYEJO is a stockbroker and financial analyst. He joins me via phone. Thank you so much, Mr. FAKAYEJO. The market is down today again, with all share index significantly low, 2.27%. Top gainers, we have NEM Insurance, Prestige, LLX, we have Multiverse, we have Ikeja Hotels. Top losers, we have Connest, Dangote Cement, Japol Gold, Sovereign Inc., Stanbic IBTC. What is your reaction to this performance? Mr. Fakayejo, can you hear me? All right, then I'll connect with Mr. Fakayejo. But as usual, Efyong Cup is also in the house. Efyong, 2.27%. This is no joke.
Very deep. I told you yesterday that we should expect more of transactions in the lower territories. Remember?
Yes, you did.
What we have today as a result of huge losses incurred by MTN Nigeria, Dangote Cement, Stanbic IBTC, International Bureaus, the list is almost endless. And you see there are big cap securities. Why this happening? Investors are holding back their funds. And majority of them are doing sell-off from their investments to take more money and then get hold of it in order to de-risk what they think is coming, from the market somehow. You don't want to burn your fingers. See, incentives to play the markets begins to dry up as it is, because economic pressure seems to create some problems that many people don't seem to have control over. So the best way that fund managers want to stay afloat is hold back the funds, reduce risk somehow. We've had so many of the companies, coming down like this. But, the market is not static in a way. Even as it is like this, in other words, it provides opportunities for those who really care about market.
Let's talk to Mr. Fakayejo. I hear he's online already listening to us. Mr. Fakayejo, take it away from there. The market is significantly low.
Yes, it is not unexpected. I think at the time, I think last week I made mention that the high cap stocks, the top big six, Seplat, MTN, Airtel, Nestle, Dangote Cement, and Boa Cement. By the time we begin to see receive haircut from these companies, the market is going to be heavily affected. That is exactly what we are seeing today with the downward trend in Dangote Cement and MTN. We may still see more of this because we've not seen haircut for Airtel yet. So that one also may be significant. So the Osha index has dropped below 50 today, and when that happens, we may definitely see it dropping further. But at the time, we're going to have stability in the market, and I think that also will surface not quite long from now. But what we are seeing right now is just not unexpected. It's something that we know that it will come.
So at this time, I would always like to ask that question. Anyone who wants to invest, what would be your advice?
Well, those who have already invested, the best thing is they hold on to what they have invested, because the return on their investment by way of dividend payment is still much higher than what we expect from the money market. And also for the fact that this is only a time phase. The phase will be over and the market will come back alive again. So they are not going to lose anything out, because they will get good dividend return, and the market will definitely wear this out and will come back stronger than what we are seeing presently.
Thank you so much, Mr. FAKAYEJO. I appreciate your time.
So the big cap securities that have always supported market growth, they seem to be stable and then looking downward. Now, of course, it's a kind of a change. Do you understand? When you mark the markets very closely and you want to replicate the practical thing that you are seeing, exactly this is how it's going to be. Don't forget, by normal interpretation, what we see the market doing is a mirror of the economy. Do you understand? You are not pleased about what you see in the economy. That's why you see the market also showing the negative. That's nothing is supporting us this way. The companies, the managers are complaining, and then those who expect dividends, they are jittery. Exactly what the economy, says. So what do? The major issue is, stability of economic factors. Encourage businessmen to stay in business. Those who need loan, let them get. Those who need diesel or petrol to run, let them run. Those who, so many things. And as we do all this, then we stabilize. The most important thing is get into production. We should produce and we should be able to sell across borders, earn more dollars than what is coming from oil and gas. Otherwise, things remain like this.
Thank you so much there, my colleague Effiong Ekop there.
Thank you, Tolu.
Well, let's move on outside our shores. Asian shares eked out modest gains today as buyers were held back by persistent global cost pressures, with investors turning their focus this week to U.S. inflation data and the prospects for further aggressive Federal Reserve's rate hikes. The unexpectedly strong U.S. job data on Friday have raised the stakes for the July U.S. consumer prices report due on Wednesday, especially for the Fed's policy outlook. European markets are set for a lower open, with the pan-region Euro Stock 50 futures down 0.16%, German DAX futures dropping 0.16%, FTSE futures falling 0.12%, U.S. stock futures and S&P 500 minus rose 0.22%. MSCI's broadest index of Asian Pacific shares outside of Japan was up 0.3%. The index is up 0.5% so far this month. Japan's Nikkei slipped 0.95%, hit by weak quarterly earnings by heavyweights and lowered expectations for a video game market, while Australian shares were up 0.06%. The Bank of England is set to press on with plans to gradually sell its vast stock of British government bonds, even if an economic slowdown eventually forces it to cut interest rates. Now, that's the latest from the Deputy Governor of the Bank of England, Dave Ramsden. The BOE is primed to become the first major central bank to sell some of the bonds it purchased during more than a decade of quantitative easing, with a £40 billion sale program likely to start next month. The Deputy Governor in charge of BOE's roughly £1 trillion in balance sheet says it is more likely than not that borrowing costs would need to rise again after the BOE raised bank rates by 50 basis points to 1.7% last week. Tesla, in a fresh report, says it sold 28,217 Chinese-made vehicles in July, nearly two-thirds less than a month earlier, as a scheduled upgrade to its factory lines in Shanghai disrupted production. According to China's Passenger Car Association, the U.S. car maker exported 19,756 Model 3S and Model Ys from China last month. In June, it sold 78,906 vehicles and exported 968. Tesla China usually exports more cars at the beginning of a quarter, while focusing more on domestic sales at the end. Tesla suspended most of its production at the Shanghai plant in July due to an upgrade that aims to bring the factory's weekly outputs to around 22,000 units, compared with levels of around 17,000 in June. The head of Germany's network regulator, Klaus Müller, has welcomed the European Union gas emergency plan, which comes into effect today. The deal asks EU countries to reduce their gas demand to attempt to fill gas storage and prepare for a possible full Russian cutoff. It also asks them to voluntarily cut gas use by 15% this winter and could make the courts binding in on a supply emergency, albeit with numerous opt-outs for some countries and industries. Oil prices on international market pulled back slightly today on the latest progress in the last-ditch talks to revive the 2015 Iran nuclear accord, which would clear the way to boost its crude exports in the tight market. U.S. West Texas Intermediate crude recorded a 1% price dip to hit $89.85 per barrel, now selling at $95.74 per barrel, registering a downward price margin of 0.94%. Bonnie Light's performance remains static in a red zone, trading at $118.10 per barrel. For the OPEC basket, the crude oil dealers offer $100 per barrel, recording a drop of 1.17%.